So today's masterclass is hosted by Liberata, and it is on mastering the AP controls to prevent errors and fraud. So today we're going to be joined by Bob Jones, Service Delivery Director,
Hi.
Elaine Ledingham, Service Delivery Manager,
Hello.
Stephen Wilton, Service Delivery Manager,
Hi, everyone.
Justin Lucas, Service Team Manager,
Good afternoon.
and Ollie Wheeler, Operations Manager.
Hi there.
Okay, so just a quick introduction to today's session. So we'll be covering errors and fraud, cause financial loss, reputational and operational challenges. We'll be looking at best practices to strengthen AP controls across the supplier payment cycle. We'll be looking to prevent duplicate payments, improve data integrity, and spot red flags, and boost accuracy, visibility, and confidence in your AP operations. Liberata have come together with some learning outcomes for today, so hopefully you'll understand key risks and control points across the supplier payment cycle. Learn steps to identify and reduce duplicate payments, overpayments, and fraud. Recognize the importance of supplier data accuracy and verification processes. Appreciate how proper staff training underpins error and fraud prevention. And hopefully have takeaway actionable tasks to improve your AP controls immediately. We'll be looking at what Liberata do. We'll be looking at why controls matter, supplier master data best practices, preventing duplicate payments, the benefits and challenges of supplier reconciliations. I know everyone watching this, we talk about supplier statement reconciliations a lot. Additional controls and best practices, and then we'll come back for some summary and some Q&A at the end of today's session. So without further ado, at this stage, I'm going to hand over to Bob Jones, and he's going to give us a further introduction on the Liberata and why controls matter.
Thank you, Kate. So Liberator, we're an outsourced provider for business process services. We provide typical back office services, and this covers areas like HR and payroll, customer services and contact center, and finance and accounting. And finance and accounting includes accounts receivable and, of course, accounts payable. In terms of how we do it, we can offer to provide either a fully managed service in those areas, or what we do is we can provide standalone support solutions, and we offer these to our clients for them to actually use to help them deliver their own back office functions, but in a more effective way. Now, although the services that we provide actually differ, in terms of our delivery model, it remains the same in that what we do is we use technology and we couple this with our in-house employee expertise, and this enables us to provide a high quality service to our clients. So that means that we're both a managed service provider and a solution provider, which puts us in quite a unique position, as we've got staff who are expert practitioners, and these staff work with our development team to actually produce and offer solutions to our existing and to new clients as well. We're always looking to develop new solutions to resolve the operational issues that we come across as part of our BAU. And once we've actually developed them, we then utilize them with our existing clients, and then that enables us to then offer them as standalone solutions to potentially new clients. As a company, we were formed in 1975, so that means we're currently celebrating 50 years. And we think that the key to our longevity is really the fact that our clients continue to be attracted by the innovative approach which we bring to resolving operational issues. And this means that we can then deliver for them enhanced services. So, as you say, why do controls matter? Well, as an AP team, we're all responsible for processing high volumes of information in the form of invoices and payment requests. And as AP teams, we've got to do this quickly and crucially do it accurately. This ensures that documentation that we receive meets certain criteria. We've got to make sure it's been correctly authorized. And then when we're satisfied and we've processed it, the teams themselves are then responsible for paying hundreds of thousands, if not millions, or even hundreds of millions of pounds out to suppliers. Because the scale of these financial transactions is so large, this service area has to be seen as a high risk area, both in terms of what the impact of any potential mistakes may be, but also in terms of being targeted for potential fraud. Now, we've all seen examples of where there's been attempts at fraud or mistakes are being made, and certainly in the last year or so, some examples that we've seen include things like targeted spoofed emails, supposedly from senior officers in the organisation. This would normally ask an AP officer to make an urgent payment. What this does is it plays on social engineering. It puts the officer under stress as the request comes from a senior officer, and then it also places them under further stress by saying the payment is time critical. This tries to encourage them to ignore the internal controls that are in place in order to bypass it and make that payment as quickly as possible. Another example we've seen include fake emails from suppliers advising us of bank change details. At first sight, these emails look genuine, they look completely real, but it's only when you look at them more closely that you may see errors such as differences in the email address of the supplier. And then lastly, the fact is that, AP teams are run by humans. Humans make mistakes. So we've had an example where we had a genuine change notification in bank details. The AP officer updated the system with the new details, but actually forgot to save it. As a result, the new details weren't uploaded and the payment was made to the incorrect bank account. So we can see here that poor controls or lack of controls carry a real risk for all organisations. They result in financial loss, reputational damage, non-compliance, and then of course there's the time and effort required by the AP team to actually resolve these issues. Basically, the nature of the AP process means that there's always a risk of errors, overpayments, or internal or external fraud occurring at any stage in the processing cycle. It could be from receiving the invoice, entering it onto the system, approving it, right the way through to actually making that payment. Now, given the volume of payments that most AP teams actually process, the only way to really protect an organisation, and crucially the AP officer themselves, is by ensuring that we've got adequate, robust controls in place. So with this in mind, this whole session, really, we wanted to focus on a number of areas within an organisation which you may want to actually audit to ensure that you've got what you feel are adequate controls in place. So these areas cover control over supplier master data, impact of duplicate payment reviews, and benefits of supplier statement reconciliations. Thanks, Kat.
Brilliant. Thank you, Bob. So next, I'm going to hand over to Elaine, and she's going to be taking us through supplier master data controls. Elaine.
Lovely.
Welcome.
Thank you. I'd like to start, if we could, Kat, by doing a quick poll, if you wouldn't mind, please.
Yes. There we go. Should be coming.
Here we go. So I'd be interested, for those of you who have joined us this afternoon, to let us know how often you review your supplier master data records. We've got some choices there: never, continually reviewing as part of the payment validation process, every 12 months, every 18 months, or longer than 18 months.
Yeah, so we'll give the audience a minute or so just to put their votes in.
Lovely.
Yeah, I'm going to pretend I can't see which way this is swinging.
Yeah, interesting to see these coming through.
Yeah, it's always quite an interesting topic when we have events as to how often you do it. Is it sort of a nice to have? Is it part of your control? So I'm intrigued by the results myself.
Yes.
I know from my experience of being an AAP manager, I had quite a non-negotiable on this, but it'll be interesting to see.
Yeah, I've seen different organisations and what have you. Yeah, it has to fit in with the size of their master files, whether they've got the technology to do it, if they've got other checks, different controls further down the field. So yeah, so one size doesn't necessarily fit all. So yes, I'm sure we'll have a very mixed bag in our results here.
Yeah, well, we're about to find out. I'll share the results now. So
Wow.
how often do you review your supplier master data records? So never is 4%. Continually reviewing as part of the payment validation process is 64%.
Wow.
Every 12 months, 18. Every 18 months, 4%. And longer than every 18 months is at 11%.
Yeah, you can see that 64 is obviously that massive majority, and it probably is at different parts, either releasing payments, processing invoices at all the different stages. Yeah, that's really interesting to see that. Thank you very much for sharing that, everyone. I mean, as we've actually said, with I can see from those details that you're verifying as you go along those bank details. And what's really, really important is verification, because we need to make sure we have accurate information and complete supplier records at every stage of our AP journey. And if we think about our AP journey, it all starts at this very, very beginning, which is the setup stage. And if we think about some of the areas that if we don't get it right first time, it could cause issues of varying degrees along that journey for us all. So the first thing we always say is the name. The name's so critical, because the name of the person we set the supplier up for is who we're going to do the ordering from, who we're going to be paying, who we're going to be reporting on, who we're going to do our returns on. And it's really important we get that name right, because if we don't, obviously we might have to do reworks, we might have to do changes. That's going to slow down our AP process. Also, getting the name wrong, I'm going to switch it now, means that you're more of a risk of making duplicate payments, because when you're searching to set up a new supplier, you might set them up again and process invoices again. I'm sure we've all had experience of names being misspelt wrong and having to do both of those situations, corrective action. Address. Some of the things when we're setting up our suppliers, or we find in the organisations that I've been working with, is that we quite often use the address as our search function. So we're putting a postcode, we're putting a street name, we're putting something to make sure that supplier doesn't already exist before we do that. So therefore, it's really, really important that we get that postcode right, we get that address right, not only for doing our setups, but also if we're still sending any hard documents in the post, such as POs or remittance advices, we need to make sure they get to the right place, to make sure our deliveries get ordered, and make sure people know what we've made payments for. Because if they don't know, they're going to be on the phones, they're going to be on emails, they want breakdowns. That's going to take valuable resources from our AP teams answering those questions. Bank account details. Now, as we know, literally, I'm not doing a poll on this today, but if I asked you on a poll, I would say probably at least 90% of your people you're paying is paying by directly into their bank accounts, and we need to make sure we're paying into those correct bank accounts to prevent any incorrect payments, and any fraudulent bank accounts aren't set up. So we need to do some checks on that, which I'm going to go through in a little bit further down. Along with that, I think some organisations perhaps don't put too much focus on it. This has become really current in some of the workings I've been doing with different companies I've been working with over the last few months and years, is about the payment terms. If you've got an AP system where you've got your suppliers and you've got your payment terms set up, some of them go for standard, which is fine. Some of them go with the terms of their suppliers want. But what I would say is sit back and question, am I paying my suppliers too soon? Am I paying my suppliers late? Either way, this could be costing your organisation's money. If you're paying too soon, you're losing on that interest and that investment in your bank accounts. If you're paying late, obviously you could be paying late payment charges or interest on that as well. So pay attention to that. Also, another thing we've looked at, which could lead to fines, non-compliance or fraudulent activity, is the treatment of VAT and construction industry. We had an example where we had somebody that gave us a wrong VAT number or an incorrect VAT number, and then charged the wrong amount to us on an invoice, where they weren't actually registered to pay VAT. So again, if you can do your checks, and that's a free service that for those that you don't know, the government websites will allow you to put in the VAT numbers, put in your supplier's name, and make sure the numbers they're providing is correct. So at the beginning of the setups of the suppliers, in summary, what I think I'm actually saying to you is it could lead to fraud, breaches, disruptions of any services or ordering, may mean reworks. You could make incorrect or duplicate payments. You could have additional costs. And more importantly, I also think is you could have poor supplier relationships and terms if you don't get it right at the very, very beginning. So how do we deal with that in Liberata and wider to make sure our own suppliers, but also the suppliers we do the work for, are set up correct first time? So what we do is we make sure at the very, very beginning that our setup requests have clear guidance of what's required. We have authorizations in place so that we know that the request is coming from an authorized individual. We make sure that when we're setting them up originally that we do some mandatory supplier prevention control checks. So that's like putting in, for example, my surname. I wouldn't just put in Leadingham to see if I existed. I might put in LED and a percentage to make sure I can see anybody that starts with an LED, all those things that might be built into your system. Again, we also look to see, okay, let's check these bank account details. Have we got more than one supplier with the same bank account details? Now, that might be a valid reason, may not be, but again, it's type of things to double check on. Another thing that could be quite useful at the front end is to not have suppliers on our database for longer than necessary. So we would call this our supplier lifespan. So what we would do is check to make sure, is this a one-time supplier that we're never going to order from again? If so, why do we need them there? Is this somebody that we're going to work with for 18 months as part of a contractual service or something they're delivering for us? Should we have an end date that we diary to make sure we end date that when that contract's ended or been delivered? Or do we want it open-ended because we want it there for our service users to be able to use and choose forevermore? And we make sure we have be able to identify that. And if we identify any of those criteria, make it inactive if necessary at the right stages. Also at that front end, key data is quite important in the sense of knowing your suppliers. Now, some of you will have hundreds, if not thousands of suppliers you're dealing with, and you can't possibly know those suppliers personally. But what you can do is make sure you've got key information. You can make sure you've got up-to-date email addresses. Make sure you've got up-to-date telephone numbers. You can make sure you kind of know the sequencing they're using. So if you always have a supplier that you know send you their invoices starting with ABC, if all of a suddenly there's no ABC on it, again, you could have flags built into your system that you can kind of capture that information. So key data, know your suppliers. Also, at the front end controls is about validating that key supplier details. So it's not just to prevent frauds, it's literally to look at those deep fake frauds that are now coming across that look like it might be from your CEO or look like it might be from the supplier you're used to dealing with. So alongside with those other validated key controls you can use is companies' names. Use free tools, particularly that are available to you. Look at Companies House, see if the name and address registers. If it's an individual, make sure that you've got the official banking documents to support that payment to an individual. And also, if possible, and your systems already have it, or you can integrate one, use a bank code, sort code checker and account number. If you don't have those for whatever reason, and there's lots of reasons why people may not, you can actually make sure you're phoning the person you're going to be making the payment to, particularly at setup. And what we would recommend is do not use information that's sent via email, but make sure you source that phone number independently. Again, when setting up the suppliers, what we would also recommend, if you can, if at all possible, have a segregation in the setup process. So the person setting up would therefore be checked by another individual. Possibly have built-in system flags. So if something's changed at setup, it's flagged or workflowed for another person to review. If you haven't got these or to run alongside these, perhaps have some audit or control reports that are produced and you can review those manually to see some of the bits that are going through there. Or if system reports aren't possible, perhaps you could have literally the information emailed to you with supporting documentation that is verified by perhaps another person if you can do to check that those key informations, the names, the address, the bank account, sort code and account number have been entered properly. And you may choose that you might not be able to do that for every single type of supplier, but perhaps your high spends or you could do it by supplier type, depending on what would suit you. But none of those will actually work for you unless you have the right teams in place that are doing these things for you, because your teams or your inputters and your processes are key to this. So I would recommend having maintained documents, maintained procedures, maintained governance, and making sure that people get the right training and refresher training as they need to. I'd like to now then move on possibly to when we have this standing data there, we set it up, but at various stages and for various reasons, that standing data changes, and we would get advice of coming in saying, can you change this? Can we do this? So one of the big changes that I think we need to focus on is when a supplier changes their bank accounts. So I'd like to, if I may, Kat, do another poll, and we can try and find out from our audience this afternoon on how often the organisations with us today verify their bank accounts.
Okay, should be live now. So your options are never, only when setting up a new supplier or changing existing supplier details, every 12 months, every 2 years, or longer than every 2 years. Okay, so I'll give people a minute or so to vote on that. Again, it's definitely one answer taking the lead on this one, Ellie.
I can't quite see that yet. In fact, what
Not
I'm
yet.
seeing is, how often does your organisation? Now, I'm tempted to answer myself, but I won't do on this occasion.
Okay, we're pretty much nearly there. We'll give everyone about 10 more seconds.
Lovely.
Okay. And we'll close the poll and share the results. How often does your organisation verify suppliers' bank details? So 5% was never. 89% only when setting up a new supplier or changing existing supplier details. 5% every 2 months, and then 2 years and longer than 2 years have no.
Oh,
No
very
votes.
interesting. So yes, so we have definitely got that front runner. So it's definitely when they're changing or setting up. Yeah, I think they're critical at every, definitely as a minimum at those two stages. So yes, that's what I was expecting. Yeah, so it's nice that we're all doing it like that, or the majority of us are doing it like that. So as changes come in, we have different ways that we may actually get notified of a change. Some organisations may have official forms that you need to fill in. Some organisations might have a portal. They might require official documents from banks, from whatever. There's a whole range of things. But I think the most important thing to focus on is that the bank account is to obtain the emails and phone numbers and then check those separately. Our advice as well, and which we often find is, and I'm going to give you one real life example, we quite often have and have managed to stop, because I don't know if there's a train or a spurt of people trying to go through this route, is we used to get people phoning up and saying, I really need you to change the details of the bank account now, because our employees will not get paid, and I forgot to tell you we've changed our bank account details and these workers need this money in their bank accounts for Friday. Please accept this email. Another example we've had is that they change the banking details on an invoice, send through a invoice that they've made up to look like an invoice of a supplier, and they ask us to use the details on the invoice to update the bank account details on the supplier record. So again, in the organisations we've used, we would not change supplier details from an invoice. We always use another method, be it a form, and worst case scenario, if we've been in a situation where it's ever had to have been done from an invoice, it would have to have been verified by an independent phone call sourced from everybody else, going back to those root tools we use to prevent any fraud. The main thing we would recommend is that we always make sure that we verify, do not make any changes to it's been confirmed through that independent source. Make sure we capture the details of who we spoke to, when it was confirmed, and if possible, use bank verification software. And while using that, make sure the name on that verification software is exactly the same name on your supplier account, because people can have bank accounts with slight variations and you don't want to get caught making it into the wrong name because the name didn't match. And you will see, for those of you already using the validation software from banks, the banks will tell you if the names are different and ask you to accept whether you're going to accept that change or not as a bank account, for those of you who have used it or are making payments online. And another thing I would say, although I never like saying make the payment late because it causes problems with suppliers or could have some costs involved, my opinion is, if in doubt, make it late. It's better to make it late than wrong because you were pressurized to change those bank details. Finally, my recommendations and that of Liberata would be, if you can with your supplier master records, try and restrict the data to those that need to see it and who are able to view and update, and if possible, segregate that function. If you can, remove incomplete records. So do audits on your things, pull out the information, remove incomplete records because there's a risk of them being used by mistake. If possible, check for duplicate suppliers and take inappropriate action. And we're going to have a section on suppliers and duplicates and whatever, which will be useful as we're going through this class today. Make suppliers inactive that have not been used for a certain amount of time. Again, if you're not using them, why are they sitting there? The risk is they might have changed details and then one of your users go to use them again and they've changed bank accounts since, or they've moved or whatever. So make them inactive if you can, if you haven't used them for a while. It's particularly also helpful if you haven't used a supplier for a particular amount of time to do those verification checks, going back and having a look at those. And again, we've got some more information on those. Also, ensure that where possible, the invoices, the details on the invoices match up to that supply and standing data if you can. I know from our first poll, a lot of you you do that, and on the second poll there was evidence with those really high numbers of the 89 and the 60. I can't remember the quite number of the 60 at the very beginning, also doing that. And also scheduling reviews. I know we've never got the time to do these things. There's always lots going on, but it will actually help going forward to scheduling reviews, look at the bank accounts, look at the names and the email addresses. And the main thing that really I want you to take away from this section of the class is you need to ensure that for the processing information that you're doing, and if you're processing payments and suppliers on behalf of another organisation, that you can be confident the supplier details are correct because they're at the very, very start of the journey that's going to feed through to the rest of it. And make sure that you validate at every opportunity you possibly can, because that will reduce the potential risk of financial consequences for you as your organisation, but it will also help protect your supplier that you're also paying and doing business with and need as part of the servicing you're delivering.
Excellent.
Thank you, Pat.
Brilliant.
Thank
Thank you,
all.
Elaine. You're very close to saying a catism there. When I was in AP, I used to say, if in doubt, take it out when it was a payment
Did
run.
you?
Yeah.
There you go. That's good.
So there you go.
I might use that one as well to add a bit of spice and variety when I'm talking
I got
to
very
my
excited
people.
and then you said
So there you go.
something slightly different.
Thank
Brilliant.
you.
Thanks so much, Elaine. Really fantastic part of the class. next, without further ado, we're going to move on to duplicate payment prevention, and that is with Justin. Welcome, Justin.
Thank you very much, Kat. I think it's time for another poll.
Yeah. Remind
You're
me
right,
to
elections are very adrenaline-inducing, aren't they? Waiting for the results to come in.
You're a little bit quiet there, Justin. I don't know if you can adjust your
Yeah.
volume a little bit. There you
Yeah.
go.
Louder, is that better?
I find it really exciting. I feel like I'm on a quiz. I was thinking, like, oh, I'm going to get the answer right.
I'll launch the poll now. So when did your organisation last undertake a duplicate payment review? So the options are less than 3 years ago, between 3 and 5 years ago, more than 5 years ago, or we have never completed a duplicate payment review. So again, we'll give attendees a minute or two, but they seem to be voting quite thick and fast. They're enjoying the gamification of these polls, I think. I've got a very competitive community in the nicest possible way.
This makes me think I should join some more masterclasses myself so I can have a go at voting, I think.
Okay, I think a majority of people have voted, so I will end the poll and share the results. So when did your organisation last undertake a duplicate payment review? Less than 3 years ago is 68%. Between 3 and 5 is 3%. More than 5 years ago, 3%. And we have never completed a duplicate payment review is 26%.
Quite a big jump there, isn't there? I think that shows if you're going to do duplicate payments, you're going to do them quite often, or you're not doing them effectively. So that's quite an interesting result there. Cool. Okay, so duplicate payments. They're more common than we think, and they're also more costly than we expect. So there is good news. They're also very preventable. Our studies have shown that nearly 2/3 of UK financial professionals have received a duplicate invoice, and then a further third of them end up paying them. And other studies suggest approximately 1% of all invoices paid are duplicates. So if you consider 1% of your total payable invoices over the space of the last 3 years when you've done them, or you haven't done them before, that could be a substantial amount of funds waiting to be recovered and then returned to your budget. And even if you don't find that 1%, an audit of your accounts payable ledger will give you peace of mind that your controls are strong and working. We'll talk through some common causes of duplicate payments, give you some real life examples from our own duplicate payment review service, and then recommend our best practices to prevent them. Duplicate payments are usually caused by process gaps or inconsistencies and not by people not doing their job correctly. For instance, we often see a supplier set up in different ways. We'll see the supplier names abbreviated or with their full trading name, or they'll have a spelling mistake which some systems will not flag. We'll also see parent companies and their subsidiaries may also receive payments for the same service if both suppliers are listed on the invoice, or even if there's multiple teams of access to great suppliers. We'll often see duplicates where a same-day payment or a CHAPS payment is being processed without notifying the AP team to hold or match the invoices. In some cases, refunds are also presented but not allocated, or a clear audit trail for the original invoice is not put on the system, which can lead to further overpayments. The key message here, though, is to not point fingers, just to understand the root causes so you can have a look through and recommend processes to save yourself time and money. In our recent duplicate payments review we did for an NHS client, we were able to highlight just how easily duplicate payments can occur. One of the more significant findings were overpayments of £340,000 over 7 separate transactions. This is where both pro forma and actual invoices were paid for just one supplier. And we had another supplier who had £90,000 for the exact same reason. Even overpaying invoices is a common theme, where balances of £67,000 and £74,000 over 2 suppliers have overpaid invoices. These examples illustrate how small gaps in verification checks, in these cases the invoices are either entered incorrectly or reconciliations are not made against previously paid invoices, can lead to significant financial losses and unrealized credit balances on your supplier account. So how do we recommend to challenge this? So there's a number of ways that Liberator recommends and we utilize in our day-to-day. Our first one is a three-way matching, so use PO, invoice, and good receipts. This is supported by a no PO, no pay policy, where every invoice is validated against a purchase order and a good receipt note before the payment is released, and this prevents unauthorized or ad hoc purchases bypassing your controls. We also recommend using your system's automated duplicate invoice detection if you have it on your system. This could look at duplicate values or similar named suppliers and invoices that are keyed incorrectly. Consider your staff training as well, so ensure your similar standards for setting up suppliers, or have a central team of controls to ensure that only appropriate people set up suppliers. We also recommend verifying all new suppliers by your bank account details and the address, and not just the name. Regularly review your supplier statements against your system, and then identify transactions with unexpected dates or patterns. This could be inconsistencies with a supplier's typical invoice pattern, or perhaps invoices presented to you in the wrong period. This could also help flag potentially fraudulent transactions. We also recommend a proactive management of your age creditors report, which is regularly reviewing the old balances and the credit balances on the account. To highlight one project, we identified £1.2 million in overpayments, duplicates, and credit balances over a space of 5 years. We did a root cause analysis where we were able to make a number of recommendations that could quickly provide fail safes, protecting the team from duplicate payments. Firstly, was the proactive use of the age creditors report. To review your credit balances on your account, how old they are and why there's a credit balance. If you can, add in notes onto either the age creditors report or directly onto the supplier note field. You need to note who you've spoken to and who they are within the business, and note why there was a duplicate, and then compare this against other ones on your system to identify what part of your processes could do with an update. We provided a root cause analysis for another supplier where we identified over 3 years of data, £868,000 of refunds, identifying 72 separate duplicate payments over that period. The majority of recoveries could be identified just reviewing the supplier statements and were caused by multiple supplier accounts, a merge of accounting system, and then just standard typographical errors that were entered the invoice in. Our recommendation was for the client to perform a supplier master cleanse and close duplicate suppliers, and then the suppliers are not used in the last year. We also recommended a unified accounts payable and treasury process for the CHAPS payments to ensure that the invoices on the accounts payable ledger were put on hold or manually matched against the payment. And so I really want to note as well, a lot of suppliers will say that they can't send the refund back to you when you request it because you have overdue invoices on your account. You can't do that, so send a copy of both remittances of the payment and then request that it's refunded. Thank you very much.
Brilliant. Thank you very much, Justin. Lots of things that I like to hear there. I used to love a good age creditor purge.
Yeah, I thought it was 2 Excel sheets, just reconciling them. It's fun.
Oh. Brilliant. Thank you very much. Next, we're going to move on further, a deep delve into supplier statement reconciliations with Steve. Welcome, Steve.
Thank you, Kat. Lovely to be here. The area I'm going to focus on is a task that's often overlooked or deprioritized, but critically important, which is supplier statement reconciliation. It can feel like a low-value, admin-heavy process, but when done right, it unlocks major benefits from improved cash control to reduce risk of overpayments. So let's talk about why it matters, what best practice looks like, and how you could improve it in your organization. So I'm just going to pop you back to Kat, and we will do a quick poll.
All righty. So how many suppliers do you regularly reconcile statements for? The options are we do not currently reconcile statements or only on an ad hoc basis. We do it on the top 20 suppliers by spend, the top 50 suppliers by spend, top 100 plus suppliers by spend, or all suppliers. So this one's actually looking to be a bit of a mixed bag, which I would expect from some of our previous events. Seems to be very different.
I'm really interested in the result for this one because you said you've been talking about it recently.
Oh, we were always talking about statement reconciliations. We love a good statement reconciliation chat or debate. Okay, so I think the majority of people are voting. I'll give you 10 more seconds, everyone. While I do that, a big storm has broken out here in Newcastle, so I'm going to fingers crossed that everything's all right on my end, and I'll end the poll and launch it. So the shared results are, how many suppliers do you regularly reconcile statements for? 5%, we do not currently reconcile statements or only do it on an ad hoc basis. 31%, top 20 suppliers by spend. 13, top 50 suppliers by spend. 13% for top 100 plus suppliers by spend. And 38% all suppliers.
Thank you, Kat. That's really interesting mixed bag of results there. So why don't more companies do this more consistently? The truth is, supplier statement reconciliation is often a manual, time-consuming and undervalued task. Many AP teams are already stretched thin, so reconciling supplier statements can get pushed down the team's to-do list. On top of that, the process can feel repetitive, copy and pasting from PDFs or spreadsheets, cross-referencing invoices or chasing suppliers and missing information, all while trying to keep up with day-to-day and payments and other responsibilities can be quite a big task to do. But the risks of not doing it regularly can be quite significant. You could have missed invoices or duplicate payments could distort your ledgers. You could have unclaimed credits, which lead to lost cash. You could lose visibility of your supplier's account health. And if something goes wrong, our AP teams can be reactive to the process. So what does best approach look like? So what should good supplier statement reconciliation look like? As its core, it should be proactive, not just reacting to issues, but spotting them before they escalate. Regular and repeatable. This should be a process that's built into the accounts payable team as a consistent control. Data driven, so leveraging automation where possible to reduce manual work. And collaborative. So this involves communication with your suppliers to close the loop quickly. A strong reconciliation process checks supplier statements against your ledger, and this will ensure that no invoices are missing from your system, no payments have gone out for items or services not invoiced, credit notes are accounted for and not lost in the shuffle, and any discrepancies are flagged early and resolved efficiently. Within Liberator, we recognize those barriers that were preventing us from regularly completing these reconciliation. So now we use automation and intelligent tools to support this function. Rather than having our AP teams manually compare Excel files or PDFs, these tools can scan, match, and flag discrepancies within seconds, freeing up staff to focus on investigation and resolution rather than data entry. So now I'm just going to go through a case study and our solution. So at Liberator, we support clients by taking this reconciliation burden off their plate. Our approach combines automation with AI and specialist AP support, so the process is not only faster, but also more accurate and scalable, reducing a manual task from hours to potentially seconds. One example, we recently partnered with the NHS Trust and processed over 2 million invoices, and through our reconciliation process, uncovered 1.3 million in unclaimed credits and duplicate payments, of which 800,000 for them has already been recovered by our team. So what made the difference? It was the use of automation to read and compare supply statements from PDFs, spreadsheets, or portal extracts, automated matching to ledger data with exceptions flagged for human review, and a root cause analysis to help the client improve their internal processes. On top of that, we have a dedicated AP team that manage supplier follow-ups on our client's behalf. This highlights how regular completion of supplier statement reconciliation can deliver real value. So what are the benefits of doing it? So whether you're doing this in-house or with support, the benefits of good supplier statement reconciliation are clear. You have time saved, so you let the automation do the heavy lifting, cash recovered, so you can catch duplicate payments and any unclaimed credits. You have fewer errors, so you can reduce the risk of inaccurate payments. You have stronger supplier relationships, which means you have fewer disputes and faster resolution to any of their queries. Compliance and control, which means you have a better audit trail and process integrity. And perhaps most importantly, using an automated technology-driven solution with a skilled accounts payable team means the process scales effortlessly. Whether you're reconciling 100 or 100,000 statements, it ensures consistency, accuracy, and efficiency without adding pressure to your team. So to wrap up, supplier statement reconciliation might not be the most glamorous part of finance, but it can be one of the most valuable if done well. It's strategic control that supports your bottom line, improves supplier trust, and strengthens your finance function. Thank you.
I was on mute. It's not like I haven't done a million of these. Thank you very much, Stephen. And last but by no means least, I'm going to hand over to Ollie, who is going to talk about additional controls and best practices.
Thanks, Kat. I'm here to discuss additional controls and some further best practices. Some of these may have already been mentioned earlier in the class, but I feel they're worth reiterating. Firstly, to discuss the segregation of duties, specifically about the payments process. No one person should be able to perform the end-to-end for a transaction. This should be handled by at least 2 people. For example, as mentioned earlier, the person submitting the payment run should not be inputting invoices and so on. Ideally, there is more different people involved in this process, but depending on the size of your team, it may not be possible to have a separate supplier setup, invoice entry, and payments team. However, at least 2 people should be involved in the end-to-end of any one transaction. Ensuring access control is managed assists with both the segregation of duty and with levers. By ensuring that levers are recorded in a timely manner, prevents accounts access with access remaining beyond an employee's leave date. This is useful to prevent anyone in the organisation accessing the account and using the account once the employee has left. And due to the rise in web-based software, the ex-employee will not be able to access the system from outside of work. This will also help your organisation's IT team by ensuring that the licenses are not used up on staff that are no longer with the business and avoiding further licensing costs. Access control should be within the ERP itself, and only users performing that role should have access to each part. Users should have the minimum level of access required to perform their tasks. This is known as the principle of least privilege, and this helps segregate the duties. Read-only access is a suitable alternative, for example, if you may need to check the accounts receivables records for some queries. There are two main matching processes when processing invoices. Hopefully nobody is paying invoices just based on them being sent through. Three-way matching is the matching of three separate documents, and these are the invoice, the purchase order, and the receipt of goods. This is the best practice as this will minimize payment errors by having to match the three documents against each other. Two-way matching is a better option in very specific scenarios, such as processing recurring transactions like subscriptions or utilities, as there both isn't a good to receipt, and these are regular monthly or yearly payments. Internal transactions where there will be no need to receipt, and low value transactions that your organization feels appropriate enough as a low value. This is due to only requiring a purchase order and an invoice, but with no goods receipting. It makes it a quicker method. However, it is more prone to payment error, as it could have payment released to goods that have not yet been received by the organization. Moving on to controls using key performance indicators. Monitoring performance and the controls through the use of KPIs and regular reporting will ensure that you are aware of the position of the team and able to identify areas for improvement. For example, through monitoring, you could have a large volume of duplicates. It would be worth looking into the root causes. Perhaps invoices are being sent via email and post and being input twice. Is this input error due to one inputter inputting it a different way to another through having a non-standardized inputting process? For example, one of them is inputting spaces and special characters in the invoice number, and another one isn't. By ensuring standardized processes, this greatly decreases the risk of these types of errors. Secondly, for example, seeing how many invoices are paid late due to not being receipted. This is a very common theme throughout accounts payable. It may mean that it needs a wider communication to the business on the importance of receipting for prompt payment. Regular training is key to the prevention of fraud, and training is not just for the AP team. Some controls will not be as effective if you solely have a well-trained AP team, yet the wider business is unaware of the risks facing payments. A lack of or insufficient training could make the business susceptible to fraud. Training should be provided for all employees within your organization that are involved in the process. Finally, process improvement, continually seeking to get better, to refine processes and ensuring those in the AP team perform the tasks are empowered to question the processes and drive change if there are better ways of working. This takes many forms and methods such as Kaizen, Six Sigma, and Kanban, amongst many others. It can be looking at your processes and making small incremental increases, for example, making 10 things 2% better, or larger improvement, such as making one thing 20% better. No matter which method, when the process is improved, there will be fewer errors. The standardization of steps in the process, removing any bottlenecks, and employing automation for input and checks will help to avoid missed invoices, duplicate payments, and the further corrective work associated with this. Thank you.
Brilliant. Thank you very much, Ollie. Okay, so it falls to me to just do a bit of a closing summary. So I want to thank the team at Liberata today. Really fantastic roundtable masterclass. So a summary of what we've covered today is we've covered supplier master data controls, duplicate payment prevention, supplier statement reconciliations, additional controls and best practices, And I think we can all agree that in conclusion, that stronger AP controls means fewer errors, reduced fraud, risk, and a more resilient financial operation. So again, thank you very much to the team. I've really enjoyed today. The suggested actions on the back of this is, I believe there's going to be a downloadable handout available on the back of this. So please log in, download that from Liberata. That'll be available for, if it's not available now, it'll be available very, very soon, and it'll be available for a few days. You can post questions in the Q&A section, and guys, we've already got quite a few in the Q&A box. So I'm going to move on to those as quickly as I can. But you can also contact the Liberata team, and I'm sure they'll be absolutely willing to help you. And I think I can do a plug to say you'll be at our conference in October. So if people want to see you live and in living colour, you'll be there. Again, you can contact me here at the APA, and I can put you in touch with the team. And of course, we at the Accounts Payable Association have various training materials and quals and courses for you. So, like I say, I can see quite a few questions in the chat, so I've kind of sped through the summaries. This recording will be available on everyone's membership portal as well, so you can go back and watch. So, without further ado, let me crack on with these questions. So, for question one, what is the legal situations of vendors who are trading as?
Do you mean in terms of making payments to them, trading as?
I would imagine so.
Because normally what would happen is on the bank account, it would have the proper legal name, and then it would be known trading as. So you could actually make a payment to either the trading as name or the legal entity name. Either would be sufficient. And if you're doing a bank check, that should then appear on that check. So you should actually have both details. But if in doubt, then you could always, once again, I think as we mentioned at the top of the meeting, independently check and speak to someone at the company and just verify that, but making sure you're getting the contact details like a telephone number via a third party like Google, rather than an email notification of someone telling you about a change of bank name or bank details.
Okay, brilliant. And I'll just call everyone's attention. Paige has confirmed in the chat that the handout is in there. So there's a link there for everyone to go and grab that right now if you want to. Next question. What are the best criteria for risk profiling vendors? I've used annual spend, but colleagues learned the threshold and miraculously all spend was below the limit that required extra due diligence.
That it's sort of dependent on the organisation that you're working with. It could be a limit based on value of spend. It could be about frequency as well, because bear in mind, you could have someone, rather than trying to push through one invoice for 100,000, they're sending through regular invoices of £1,000, which is well under the threshold. But due to the volume, you still want to check it. So it's really based on how the organisation operates and looking at, as I say, frequency as well as value, and also certain areas as well. It could be in terms of the nature of the business, certain areas might be more susceptible to fraud than others. So it's difficult to say this size, one size fits all. It's really looking at the profile of the suppliers you have, and then taking a view there to make sure that you're capturing a reasonable number based on where the risk will actually sit.
Okay,
so I don't know if that answered the question, but it's a bit difficult to just give a answer.
To what extent can solutions like DocuSign validate changes?
I guess it's got the inbuilt control about authorization, and certainly if you're looking with an organization itself, sorry, authorization, with an organization you'll have workflow, and that sort of flows through in terms of the relevant sign-offs. DocuSign, once again, it may depend on your organization's IT policy and what they consider to be sufficient. What we have seen probably over the last 12, 18 months is a stiffening in terms of our IT, InfoSec, InfoGov, but also our clients as well, and what they deem to be acceptable. And certainly you'll find that some organizations may be happy with DocuSign, others may not for particular reasons. So I would always refer back to your IT company, your IT or team rather, or your InfoGov team to see if they were happy depending on that or not.
Okay, brilliant. Next question. What's the best way to ensure supplier statement reconciliations are completed consistency with limited in-house resources? I know that's quite a spanning problem in our community.
very common problem. And I'll probably hand that over to Steve, who's probably the best place to answer that.
Thank you, Bob. So yeah, we absolutely recognise that AP teams don't often have the time to complete these reconciliations or have the resources to do so. But that's why we developed an automated solution, which means that we could do as many reconciliations as we needed to do in almost seconds rather than hours. So the purpose of that was to give a controlled approach and obviously support the AP team. So you can target that, for example, you can look at your top 20 suppliers, you can look at top spend, but you can essentially tailor the solution to whatever you need to do, but it did take all the manual burden away from the accounts payable team.
Yes, I think the answer there is really is automation. We all recognise it's something that needs to be done. We all recognise it's very labour intensive. So where can you automate it to maximise the use of the resources that you have?
Yeah. Okay. How can outsourcing parts of the AP process help improve control and efficiency?
Yeah, in terms of maintaining or improving control and efficiency. Well, I guess as an outsourcer, the way we see it is that the advantage you have is that, for example, at Liberata, we provide our AP services to a range of different organisations, and as a result, we always have to follow best practice. It means that we'll always look into utilise technology, and we're always reviewing our own processes to find more efficient ways of working. We also work closely, as I mentioned before, with our internal solutions development team, and this enables us to produce solutions to the operational problems that we come across. And also we've got sufficient scale, which means we can invest in our people. So in terms of training and support, it means that we ensure that we've got the best or high caliber of AP officers on site who are working with the latest technology, and that means we deliver a more efficient and a more effective service to our clients.
Okay, I've got time for one more question. I think we can squeeze one in. Surely the latest ERP technology can prevent duplicate payments happening at all? Question mark.
That's a very good question. I'll hand that over to Justin.
Yeah, that'd be magic, wouldn't it? But in our experience, we've not come across one perfect system which can prevent all duplicate payments. Instead, we think you need a combination of controls covering technology, processes, and training, which in combination will reduce the likelihood of these duplicates. This should be then supplemented with the regular periodic recovery audits of your historical data. If you haven't completed a recovery audit in the last few years, then this thing we would strongly consider, as well as identifying duplicates, would also allow for a root cause analysis to be completed to understand why the duplicate was made, and then allow for targeted process improvements to strengthen your internal controls and prevent recurrence.
Brilliant. Excellent. So look at that. First ever masterclass, and you have finished bang on time. Amazing stuff. Thank you very much.